talk about business types. There are many different types of business activities. But how can we differentiate between the different business types? Well, there are two main key points that you can use. One is the number of owners, and that is quite straightforward to understand. And the other is the concept of liability. So, an owner, a business owner, can either have a limited liability or an unlimited liability. But a liability, which is a responsibility, to what exactly? To pay his own business activity debts, for example, supplier payments, when the profits coming from his own business activity aren't enough to cover for these debts. When the responsibility or liability is unlimited, that means that the business owner will have to pay with his own capital for the business debts. When this liability is limited, then that doesn't actually happen. Now, just to give an example, the sole traders that you see in the case studies, they all have an unlimited liability. That means that they will have to personally pay for, say, their supplier payments unpaid if the profits from their own business activity aren't enough. Now, the majority of companies that you will see in Sage are sole traders, are self-employed. But you could potentially come across a limited company. In that case, that will be indicated in the specific exercise or workbook or exam. And you just have to remember that in that specific case, the business owners do not have to personally cover the debts of the specific company. Let's talk about financial year. What is a financial year? It is a 12-month period, usually a 12-month period, that starts when the business activity starts. And it is important because that's the period that you are going to consider when you're going to calculate either the profit or the loss of that specific year. And you will use that when you prepare your management accounts or statutory accounts. Now, the financial year is also called accounting year. And that could be the same as the tax year, but it doesn't have to be. So the tax year goes from the 6th of April to the 5th of April of the following year. Again, it's a 12-month period, which may or may not coincide with the financial year. Let's talk about counting dates. So the program date that you have seen is effectively a posting date. And what is a posting date? So a posting date, what a posting date does is indicates when a specific transaction has to be considered to be able to calculate a monthly profit or a monthly loss. So say that you have utilized as a posting date the 3rd of June 2021. Let's assume that. That specific transaction value will be included in the calculation of either the monthly profit or the monthly loss for June, for accounting period June. That is what a posting date is there for. That's the rationale. Most of the time in Sage, the posting date is the same as the invoice date. But what is the invoice date? The invoice date is effectively the date that you will see on an invoice, whether you will receive the invoice by email or you will receive a paper invoice version. Why the two dates usually coincide in Sage? Because in the Sage 50 account software, there is only the possibility to include the posting date. So most of the time that will coincide with the invoice date. It might not coincide when you have received your invoices late. So imagine you are now in April 2021 and you are recording the specific invoices in April 2021 with a date within that month. But the specific invoices actually refer to February 2021. You're not going to be able to use as a posting date February 2021. So in that case, the posting date, which is your recording date, and the invoice date will not match. But that will be the only time when those two dates are not going to be the same.